Namaste, Har Har Mahadev, Vanakkam. Today we'll see how volume plays the role and what is the significance of volume in stock market. So, on today's 19th of August, the working day for market was 18th of August. The chart you see of 5 minutes is of 18th of August. Let's see what global market did on 17th of August. So, on 17th of August, we'll check for S&P. So yes, this is 18th. Now here it's 17th of August. So on 17th of August, the global market, I'm talking about mostly US market was down. Nasdaq was also down, and let's check for Dow. Dow was also down, which leaded a gap down opening in Nifty. So on 18th of August, Nifty opened gap down, and it immediately, like in first 30 minutes, it recovered and took resistance from day's low. Okay, then market fall for some point and then remain sideways till 1345 till 145. So what I'm going to talk here about is, let's say this was an up move from here till here. So this was 0.33% up move, and let's see the volumes. So I'll mark the boundaries for the up moves so we can get a better idea. So till from here till here. Now see, market went from here till here, that is around 0.33%. let's check that in points. So around 60 points. So the volume, just check the volumes in this 60 points. Okay, it's steady. Okay, so the movement in 60 points, the volumes were steady. Now what concerns and key part is, now see the volume from here, the huge spike which came around 13 at 145, at 140 approx. Sorry, 145. So from 140 to 145 to how much? 215. This up move was of around 110 points, around 0.5% in Nifty. But if you see the volume action, I'll again mark this. So volume in this 60 point up move, only this much, is mostly equal to this movement. Can you check that? So just see here, the volume is equal. It's like stagnant, not it didn't move much. So the volume in 60 points and volume in 110 point is equal. What it shows is, it means that there was not a large scale volume which participated in Nifty movement. So there was not at all much buy and sell order in Nifty. Then how Nifty moved this much? Nifty moved this much just through one stock, which some huge or some big hedge fund did, that is from Reliance. Reliance has major contribution in Nifty's movement. So if you see at 1340, at 140, Reliance also moved. It's not same points, but see the spike at 140 till 215, and Nifty 145 till 215, same. So this move was completely through Reliance. Okay, now why I am discussing and why I am telling you all these is, so this is the up move. Now we understood the volumes in up move. Now let's come to the downside. I'll delete these things, it's not at all required. So now see, from here the selling started. Selling was also equivalent maybe of 100 points. Let me check, around 96. Okay, so the up move was of 110 points and down move was around 100 points. Now see the volumes in selling. What does it mean? Taking market up does not require that much volume. to create a FOMO, it does not require that much money for FIIs or DIIs or huge hedge funds to take market up. They just pumped one stock, that is Reliance, and market and Nifty 50 alone moved by 50 points. Sorry, 110 points with just one stock. So what they got huge buy orders over there. Here there was not much buy or sell orders, like they didn't sell put here or they didn't put call buy here. There was not much more orders. But when market came down, there were huge orders. Why? Because retailers entered in FOMO. What they thought, okay, it moved here, let's buy here. Then it's again a down move, let's buy here. It's again a down move, let's buy here. But they were still in FOMO. No, Nifty may rally more 100 or 150 points, whatever that was. But that was due to FOMOs. So whenever it dropped here, okay, let's put buy order here, because they were in impression that market will move off. So at every dip they keep on buying, and the hedge funds got more and more buy orders, and they keep on selling. So they sold around 110 points. For 110 points they was selling, which clearly indicates they need volumes, because they does not trade like retailers for 1 lakh, 10 lakh or 50 lakh like that. They trade in crores, lakhs and lakhs, crores. So they need volume, they need buyers. If FIIs or DIs try to sell their entire, or they try to sell the market in one day, there will be lower circuits in Nifty and Bank Nifty, even in the entire Indian market. So they want volumes, they have to create the FOMO to sell. So that's what they did. They created FOMO, and again they sold for 110 points. That's what I want to try to explain. So always go for the volumes. And one more thing in that, I will tell you the breakouts, how to identify that breakout is genuine or that's gonna be fake out. So in the same volume setting, you can put moving average of 20. So I'll just do this. Now see, the breakout also here was not genuine. See, it was not but a swing breakout here, but see the volumes. The volumes were not that much convenient to take trades. Even here it crossed the line somehow, because it's again taking the average. But see here, the breakouts clearly selling, huge selling. Okay, that's it in this video. Thank you.